to kind of move on to another subject, and it kind of goes in token with what we were talking about before, the luxury market, and luxury sellers, but also luxury buyers from a financing side of it. Jumbo loans, specifically. Long been kind of the black eye of mortgages because they were so expensive. It looks like now they're trending to the point where jumbo mortgages are as effective or less expensive than conventional mortgages.
Yeah, the rates on it are very attractive right now. It used to always be, a jumbo rate would always be 3/8 to 0.5% higher than you could on a conforming loan, which a conforming loan, if you hear that term, is anything below 417.
Right.
Because it conforms to Fannie Mae guidelines.
Yeah.
Okay. So anything above that is considered jumbo or non-conforming. And yeah, in the past and over the years, it's always been like 0.5%, give or take, higher. And today they're as competitive, or even maybe more competitive.
It used to be, and I remember, because I was in this situation when I bought my home a couple of years ago, that we wanted to put down enough money to avoid being a jumbo loan. Right. And literally now, obviously that's not applicable, but there's a lot of people that are trained by that have bought luxury higher end properties their whole life, right. And they're used to getting, man, I want to put down enough money, so I'm only doing 417 on the loan. Especially if you're talking about that $700,000-$800,000 buyer, they're thinking that jumbo loan's going to be really expensive, and it's a myth now. It's changed.
I will tell you though that those jumbo loans are being held, they're not being sold in the secondary market, so you're not selling it to Fannie Mae or Freddie Mac. So you're holding it on the books. So since you're holding it on the books, the jumbo requirements are, the credit scores need to be higher than you would on a conforming loan. So you have to think about that. And depending on your credit score, depending on who you go to, we have loans that are 95% up to 625, which is unreal.
Still PMI, there's still
PMI. Anything above 80%, you're going to have PMI. But if you want a bigger home and you don't have the down payment, or you want to leave it in the market for some reason, you can go 5%. You go 10% down to 850. But normally, it's a 20% down payment, depending on your credit score, and depending on your credit score, it may be or loan size. Because the higher you go up in loan, like you go to $1.5 million and up, you may have to put 30% down.
Yeah, and it's interesting because when the market crashed, even 700,000, you had to have 30%. It was a lot more down payment sensitive than it is now. So if you're out there on the fence thinking about buying that luxury property, that's definitely something to think about. We're going to be back continuing our conversation with Paul Arrington from Erico Property Management Realty, Arnie Diaz from the Diaz Duo at Waterstone Mortgage, and Sean Yesner from Yesner Law after a quick break here on the Duncan Duo Show.